Okay, so today is September 2nd. It's Wednesday, September 2nd, 2020. And this is our end of day review performance in the live trading room. What we're reviewing is the NASDAQ 100, 5-minute charts, trading the adaptive entry system. The adaptive entry system applies to any index, any derivative, any stock for options trading. You can use it on any time frame, 1 minute, 5-minute, 30-minute, daily charts. Okay. What we do is we profile the 5-minute chart based on the NASDAQ 100 futures because it gives us a very pinpoint focal area of focus where we can help our clients, help our community of traders understand how to make choices as the signals present themselves. The adaptive entry system is really a very easy to trade system, and it presents itself in terms of red highlighted bars, green highlighted bars. Green you go long, red you go short. If you're an options trader, green you're buying a call, red you're buying a put. Again, you can use it on any time frame you choose. What I thought was interesting about today was the pattern for today overall. Forget about the signals just for a minute, just the pattern overall. Here's the 9:30 Eastern time bar. That's the open of the regular market session. That bar opened at 12,432.25. Now we traded down today to a low of 12,172.25, so 300 points. And then we traded by the end of the day back up to a high of 12,429.75. So it's almost as though nothing happened today. It was pretty much a flat day, except when you look at the overall picture and you see the big move down, recycle, back up, retracement, bigger move down, and then we've pretty much been on a steady rise back to the upside from there. So the adaptive entry system is really awesome because it gives us a clue as to when should we jump into the trade. Not just a clue, it tells us specifically, here's an opportunity to go short, here's an opportunity to go long, just follow the signals. So that's what we did today. That's what we do every day. And here is today's performance. Those of you who like to look at everything from 7 o'clock forward. First trade after 7 o'clock came on at 7:30. Now, what was a little annoying, frankly, but you just take it with a grain of salt, was the first 3 trades that we had after 8:20, starting at 8:20, these 3 trades back to back were all losing trades. So we had people in our community sharing with us that they were, not feeling very good, that they were feeling a little down because of those 3 back-to-back signals. And that's about 35 points. And at $20 a point, that's about $700. Well, then we get into a whole series of winning trades, and we had a couple more fairly sizable losing trades. So my point in showing this to you is that it's so important to just continue to follow the signals. You're going to have winning trades and you're going to have losing trades. And if you were to take all of the signals from 7 to 4 today, 7 a.m. to 4 p.m. Eastern, if you took all of the signals, that category, 7 to 4, all signals, ended up being positive 68 points. So when I say it's so important to just keep trading the signals, now if you reach a limit and you just don't want to trade anymore, that's your decision as an individual trader. What I'm saying is that you can't allow yourself as much as possible to be discouraged because you have losing trades, or you've accumulated 5 points, 5 points, 10 points, and then you have a 20-point loss. What happens in these types of scenarios, if you just look at that very narrow range, is traders start telling themselves a lot of stories. Well, I can't win if I get stopped out. It takes away the profits I had on the 3 prior trades. That is a false narrative that you tell yourself. And what you need to do is to look at the history and track the way we do. We track every single trade, every single entry, every single win, every single loss, and then we're able to summarize it by looking at different categories, time frames. whether we're trading all signals in that time frame or whether we're trading only the trend bias and consensus or continuation signals in that time frame. And then what we're going to do is we're going to translate all of this into a trader's personal financial forecast called the personal trading plan. So there are two categories that we track in the personal trading plan. By the way, there are a bunch of categories that we actually keep track of. You can see every one of these, every line is a different category, a breakdown of all signals, different time frames, momentum signals only, combinations of signals, holding for 10 points, holding for 20, holding for the full cycle, etc. And we also have several categories that we're researching. But we're not going to profile all of those categories. So what we do is we highlight the performance of two specific categories. One is the 9:30 to noon category, taking all signals, and that addresses people who don't want to trade all day, but they would like to devote some portion of their morning to trading. And the other category is trading from 7 a.m. to 4 p.m. and taking only the trending trades, the trend bias trades, as well as the continuation of that trend. So those are the only two signals you take there. And we capture the overall performance of those two categories so that you can see how to develop a personal trading plan. So we're going to jump over to our personal trading plan, and we're going to start with our 9:30 to noon, taking all of the signals. Today is Wednesday, September 2nd. We had 50 points today, which was really interesting. About mid-morning, I announced in our live trading room that we were up 40 points. And then a little bit after that, we were actually only up 5 points. We'd given back 35 points. But yet we finished the day at noon, 9:30 to noon, up 50 points. That's just the process of taking the trades as they come. So 50 points at $20 a point is $1,000. And our personal trading plan has scaled us up to 3 contracts. So that was $3,000 today. Okay, let's go. It's thinking. All right. And we did 13 trades, and at 3 contracts per trade, that's 39 contracts. So by putting in the number of contracts, that factors in the cost of doing business today. So our net was not $3,000 of profit. Our net was $2,844 of profit. Now, the most important part of doing this work is to work with the numbers up here. And the first thing I want to look at is this right here. This number up here is telling me what the average profit is on our winning days. Okay, we're going to have winning days and we're going to have losing days. The average profit is 27.9 points. That's for our winning days. We plan on winning 4 days a week, and we plan on losing 1 day a week. Now it's not quite that precise, but we are going to basically win, according to our plan, an average of 4 days out of every 5. And we're going to have a loss 1 day out of every 5. Okay? Doesn't always work out exactly like that, but that's why it's so important to take a look at these numbers. So 27.9, we have our future forecast based on 27.25. I'm actually going to leave that alone. I'm not going to increase the forecast to 27.9, which is the actual run rate of winning trades. And the reason I'm not going to increase it is because we've had 12 losing days out of 8.5 weeks. So we are through 8.5 weeks. Since we plan an average of 1 losing day a week, we really shouldn't have more than 8 losing days, but we have 12 losing days. So this 27.9 is the average of all winning days, but we have slightly fewer winning days overall than we had originally planned. So I'm going to leave this alone. And if it gets too far out of sync, too far out of whack between number of losing days and number of weeks, then we can dig into that a little bit more. But I'm going to leave it at 27.25 for right now, which is saying that on our winning days going forward, for the remainder of the 52 weeks, we're already almost 9 weeks into 52 weeks. For the remainder of the 52 weeks, we're going to leave it at 27.25 as an average winning day. On our losing days, our average loss for a losing day is 14.6. But again, we have 12 losing days out of 8.5 weeks. So although the average per loss is 14.6, I'm going to leave it at 18.5 because I want a reasonably conservative forecast. I don't want to over exaggerate at all. I don't want to under forecast, but I want a reasonably accurate forecast so I have a good idea of what my income over a 12-month period could be. All right, so when those numbers are entered for future forecast and we're capping the scale of contracts up to just a maximum of 3 contracts, the 12-month income forecast right now is just under $270,000, and that was having started with $5,000. So I think that's a very realistic forecast based on the art and science of this process. It is an art and a science in building your trading business. The art, very simply, is understanding when to take your trades based on the adaptive entry system and perfecting your skill at recognizing the signals, taking the signals, and managing the trade. The science and math of it really is just simply putting your performance in and then allowing your tool, your personal trading plan tool, to forecast the remaining part of the year, the remaining weeks of the 52 weeks, and make sure that that forecast is based entirely on what your average run rate is actual. So all the blue shaded fields are the actual performance, and this is a summary of those actual performances. All right, let's go to our other category that we're tracking. This is our 7 a.m. to 4 p.m. trend bias and continuation trades only. We're going to go to our Wednesday, September 2nd, and we did 45.25 points today. So we started down 45 times 20, started down, so to finish up 45.25 points is very strong. So at $20 a point, that's $905, and on 3 contracts, it's $2,715. That's our profit for the day. We did 13 trades, same as our 9:30 to noon category, so 39 contracts, 3 contracts per trade. So our profit today was $2,559. That's the net after fees and commissions. Okay, so we're going to use the same process up here. Our winning days are averaging 34.5. We have our plan at 34.3. I'm just going to adjust that to 34.5. It's a small adjustment. And our losing days are averaging 20.5, and we have it planned going forward at 20.5. So right now, these numbers are perfectly synced up with our actual run rate of profit and loss days. We have 8.5 weeks behind us. We have 7 losing days. So we are slightly favorable overall in terms of planned losing days versus actual losing days. So we've got our numbers entered correctly based on our run rate. We have our 3 contract max built in. We've already hit our 3 contract max. So the way we have the plan designed, we will not scale additional contracts. That's a variable that you can change. But based on 3 contract max, there's a $364,885 potential income over the course of 12 months. And if you decided that you wanted to change that to maybe 5 contract max, you can be assured that the only time you'll get to 5, or you can make it whatever you want. You can make it 100, which wouldn't be practical, but you can make it whatever you want. But if you wanted to increase your maximum contract size to 5 contracts, it will only allow you to scale up to 5 contracts if there is sufficient funds in the account. And the way we have it set to determine whether or not there are sufficient funds in the account is we will not allow more than 10% of the total account balance to be allocated to margin on these contracts. So in order to get to 5 contracts, each contract requires $500 of margin. That's $2,500 in total. 10%, 2,500 is 10% of 25,000. So you would not have, you would not be scaling up to 5 contracts until you are comfortably at that level. So I think the combination of the limiter at 10%, no more than 10% of your account balance, and then you deciding, hey, I'm comfortable with my trading, I'm comfortable with my performance, I'm right in line with what my averages are, I'm willing to increase that a little bit. The only reason you would increase that is because it does potentially increase your overall income over the course of a year. Or you might decide that you don't want to add the extra risk, and you might put in 2 contracts, and it's going to be somewhere around $260,000 over the course of 12 months. We're going to leave our set at 3. I think it's a very reasonable, comfortable number. And to go from 5,000 with a maximum of 3 contracts and potentially earn just under $365,000 is a pretty solid number. So, you know, there are a lot of people out in the world who will try to hype and finagle numbers saying, hey, look at this, you know, you can earn $10 million in a month, whatever. Well, it gets a lot of people energized and excited and enthused. That's not what this is at all. This is just simply taking your actual performance, your personal actual performance, or in this case, what I'm showing you, the actual performance of the adaptive entry system, which people in our live trading room are looking over our shoulder all day long. This is taking your performance from your own personal trading, knowing what that run rate is, your average wins and your average losses, and then using those numbers to forecast going forward. This is all about recycling your capital. This is all about then compounding your profits by recycling your capital and having certain limiters in there for risk. So to go from 5,000 to 365,000, is that a guarantee that that's going to happen? You'll only know after 52 weeks, but you can see it's starting to develop. We've got 8.5 weeks behind us since we've been profiling this in the live trading room. And that's a very realistic number based on the current run rate. If the current run rate decreases dramatically, then we will adjust the future forecast from that point forward. But the actual performance to date will be locked in, and it will be the future forecast that will be affected. So we're pretty excited about this. I want to just jump over and look at the averages here real quick and just double check that we still are ranked properly. This category, which we do not track on the personal trading plan, is 7 a.m. to 4 p.m. It's really gotten my attention in the last couple of weeks, as you know, because it is trading all signals from 7 to 4. And the average point production is just under 76 points a day. That's a very solid number. And if we stack rank overall performance based on the number of losing days, the points, highest point value, and the optimum win-loss ratio, that category right there is the best performing category overall. The reason I'm sharing this is because people ask me all the time, well, where should I start? What should I do? Well, I think you could start with trend bias trades and add continuation to that to kind of get familiar with the system. But ultimately, I believe you want to be trading something if you're a full day trader. And it doesn't mean you need to start at 7, but if you're a full day trader, I think you really want to be trading all the signals. That requires more attention. It's a little more mentally draining, but I think you want to trade all the signals because they all together offer an optimum level of performance. And if you wanted to start at 9:30, say, let's just change this to 9:30 and see what it looks like. So 930 to 4 is 930 to 4 is still the best ranking category, averaging just under 57 points a day. So if you don't like the idea of starting at 7, I don't blame you. You know, and the way we've built this, and kudos to Aaron Rumley for building this for all of us. But the way we built this is we can take a look at a variety of start times and finish times. So if I change this to, say, I want to trade 9:30 to 3, it still is the #1 ranked category overall when ranked against everything else. So it's a pretty strong testimonial, I think, to how good the adaptive entry system signals are when you take all of the signals. Periodically, I get questions from people saying, "Well, what if we, you know, just eliminated momentum signals, or what if we just eliminated the consensus signals?" Well, the data doesn't support that, and we're almost at 10 weeks of data, and we're going to continue to accumulate that data on a daily basis, trade by trade. All of the detail of the trades is right here, and those of you who like to scan the 7 to whenever we stop time frame, there it is for you. You can do a screen capture. All right, so pretty decent day, 50, 45, and 68. That's a really decent day, a really strong day. So thanks everybody, really appreciate you being here, being part of our live trading room, and you know, just kind of following along with what we're doing here with the adaptive entry system and the personal trading plan.